YouTube, a very good evening to you. It's Charles here of FRGNT formerly from FRGNT Daily Chart Analysis. However, for whatever reason, seemingly I have posted a link to my website on TradingView. We do have a 30-day ban on TradingView, but nevertheless, we have found a way, as we always do, to get the charts out to those that subscribe to them, and it's always my pleasure to produce them. So where are we? Today's date, more for my own record, is Monday the 23rd of February 2026, and we're just approaching 20 minutes to 5 in the evening here in Milan. So where are we today? US dollar CAD, pretty much one of the pairs that produced for me in terms of my watch list. As you can see, it was right down the end. However, it came in before any of the others, in my opinion, in terms of the DXY Confluence that I was looking to gain. Euro US dollar, I was particularly waiting for a potential bounce on that 15-minute time frame in and around these areas, but I wasn't happy to do so just based on using that gap. I wasn't sure what was going to happen with price action, and as I said, US dollar CAD tied in nicely with the DXY. Once I could see that melt happening on the DXY, then I was more than happy to then look for my setup and entry criteria on US dollar CAD. So as I like to say, where are we in the here and now? So we've entered this position. I've got two positions actually running on US dollar CAD. To be quite honest, I'm quite disappointed that I don't have three. Three entry setups presented themselves to me, of which I took one and two. Nevertheless, there was another opportunity to take a short position, but I'm grateful for the position setup that presented itself to me. So as you would usually do, I would go to TradingView to show you the analysis of the day, but as I'm sure you can see, my account is suspended and the ban lifts in 28 days and 14 hours. So absolutely no analysis coming on there. I shouldn't be too lazy. I could still post it privately, but I figured what a nice time to make a good use of other applications, such as my Twitter account, or X as it's well known for. And I'll start the day, or start the video rather, by just tapping on that forecast of this morning. As I always do, I wake up around 4:30 in the morning, get what I need to get done in the gym, potentially go for a run. Today it was the gym, and then straight to the charts once I've done my personal hygiene bits and bobs. But nevertheless, here we are on the chart this morning, and we forecasted a potential move from this area. Then at 7:30 GMT, we got on the FRGNT Mars Street live call pre-London to have a look at the possible scenarios coming from the charts today. So nevertheless, US dollar CAD was very much so on the watch list. So let's take a little bit of a deeper dive into that. And I was comparing, really looking for the confluences on the DXY, as it's saying 3 hours ago. 8 hours ago, I set a target of 10% for the week, and then 7 hours later, or a couple of hours later, then I should say, US dollar CAD, short emoji, dollar index is the key, and of course it was. Now, as we can see, judging by this screenshot, I was watching that index, watching the DXY to see whether price would indeed come up to a particular point for rejection, if this isn't already the DXY chart, but just from memory, I believe this is the DXY. So nevertheless, expecting a rejection from that DXY, looking on that 15-minute time frame, you can see that daily 50 EMA, hoping for the rejection. And then, of course, here became almost entry criteria for me. I was forecasting a bearish candle closure. Bearish engulfing is what I was looking for. I'm not sure if it came immediately, but nevertheless, we would have got it at some stage, and that's what promoted entry at number one on that bearish engulfing and the retest of that candle. Then, of course, as always, with full transparency, that is one of my entry criteria, providing it is in a potential setup area. And as I always say, it's not so much where it is, it's also what it is, and vice versa. It's not just what it is, it's where it is. Can I be aggressive here? Does it make sense? Now, I hope you were able to come off that screen and see what I was talking about just now on Twitter. I'm not sure if you're able to view that as I come off of TradingView, but nevertheless, let's take a look at the DXY to see why I came up to that assumption. Well, we can see on the DXY, if I go to the daily time frame and bring that up there for us and get rid of all of this junk to the right, we can see the DXY at some stage, it did create a low in the market. So after that, no, laterally then I'm waiting for a lower low, lower high potential continuation. And then as we saw last week, now as a result of that price action of last week on the DXY, we can see that daily 50 MA start to come down. And the previous two daily candles absolutely rejected that daily 50 MA to perfection. So of course, as I say in my community, use the facts to make the story. And the facts are the last 2 days of price action printed above, or especially on that lower time frame, most certainly printed above that daily 50 MA. But the importance is, how is that daily candle closure in relation to that daily 50 MA come close of business on that particular day? That's what matters. So always be looking to forecast that rejection coming from that particular area. So of course we wicked in, we had a look at wick high imbalances, a potential for price to push slightly above before looking for the ultimate rollover down on that DXY. Now, of course, we can see on the DXY we are having rejection in and around the region from that 4-hour 50 EMA. And then prices push, and then we've got our entry. So hopefully I'm under the assumption that we will now look to close, let's say, below that 4-hour 50 MA, which will go against my thought process, but at least on US dollar CAD, I will expect price to reach that 4-hour 50 MA before I'll be looking to take a proportion of my trade out of the market, and then I'll leave the rest to roll down to fill Asia. So that's what I was looking for. You can see we were in that daily order block as well in the DXY. We never closed above it, therefore sufficient selling pressure in the market to keep price down. That's the importance there, not so much the 4-hour 50 MA in this relation. So as we then put that information onto US dollar CAD, it was always waiting for when is price ready on US dollar CAD in relation to the DXY to then come up with a nice conclusion that we too are ready for the short. Sometimes it happens without us. That's why in this element here, I was very aggressive waiting for that particular entry criteria. And then naturally price then came back and gave me a better entry, of which I took on the lower time frame. And then we can see sufficient pullbacks into the imbalance on that 15-minute time frame for a further entry that I did not take as a result of having two potential positions at once. Was more than enough exposure for myself, and it's simply one of those that you have to let go and understand that you must manage risk and protect capital first and foremost. So am I unhappy that I'm not in it? Of course, but am I happy that I'm in two current positions and already break even? Absolutely, that's the game done. So US dollar CAD currently floating in some profits, and again over on my Twitter I was updating that throughout the day in terms of what price was doing. You know me, full Mr. Transparency across all planes. And there we are currently on US dollar CAD. So as I mentioned, I haven't mentioned rather, this particular setup also for me as price came up into this area would have been my standard Asia range short position. However, as a result of recognizing that the DXY may not be ready to then roll short at the time that I'd be looking to, let's say, enter an Asia range position, of which is in a very aggressive type of entry criteria, of which I would have to follow in order to stay in line with that strategy. I wasn't comfortable with taking an aggressive setup at that stage based on the DXY. Therefore, I reverted to the higher time frame directional confluence, which is not an aggressive entry style in comparison to an Asia range fill. That is why my ultimate target is indeed Asia range. However, in line with higher time frame and directional, I quite understand that the 4-hour 50 MA would definitely be looking to reject price to the upside. Why do I get that information? Well, I simply revert to that 4-hour time frame and have a look to see how price has previously, historically, respected that 4-hour time frame. And as you can see, as price then broke above that 4-hour time frame too, if I look to the left, start a potential bullish uptrend, we can see the first break above rejection from, and we continued as we then came close into that 4-hour 50 EMA, we rejected. So of course, if price then comes back to that 4-hour 50 EMA, I am looking for much of the same. I'd be a fool not to manage my position by there. So I will be taking considerable amounts of profits off if price does get down to that 4-hour 50 EMA. And then something that I just had an inclination, I should say, this morning as I was going through my chart analysis. And again, I'm using X or Twitter or whatever it's called these days in relation to being a bit of a historical playbook for myself. And this morning, if I can get to it without too much of a delay, something in the realms of it being a plus 10% week that I'm looking to target today. And that comes with experience, to be quite honest. When you analyze the charts in the morning, particularly on Monday, you can really get a good gauge and a nice sentiment for where price is and understand, will there be opportunities potentially today, tomorrow, so on and so forth. Even in contrast with that, you can wake up in the morning and have a look at the charts and understand that today is more than likely not going to be a trading day based off what I can see right now in front of my very eyes. So as a result of viewing those charts this morning, had a bit of an inclination that this week could be a successful week. Of course, this trade was planned to go 1 to 10. I can see it pushing now, but in my opinion, that is simply pushing into that imbalance before potentially a rejection down. And there is no need to fear, because absolutely that is what price does it not? Price trends up, higher high, higher low, higher high. We've created that higher low potentially for maybe a higher high, but in contrast to the reason why we took that position, my inclination is that is indeed the low that has now been created, and we are simply pulling back up to make that lower high for a potential lower low into that 4-hour 50 EMA region. So if I highlight that for your illustration, as you can see here, a beautiful 15-minute order block left behind. That would, to be honest, if I wasn't on the call and I wasn't in that particular trade already, I'd be looking to take that position without any shadow of a doubt. Quite clear. Nice stop loss there. It's just the range that we'd have to consider, and personally that's not a range that I'd be willing to risk, so that would not be a position there. However, you can absolutely see where price is looking to reject, so nothing to fear at the moment. What else can we say about that? That's pretty much it, to be quite honest, guys. Just a bit of an update. Well, you won't see me on TradingView for at least 30 days unless you're able to view my charts privately. That tomorrow I'll endeavor to start posting them privately and sending them to the relevant communities. But nevertheless, on YouTube, on X, on Twitter, on Instagram, I'll be ever much so active as a result of TradingView banning me for 30 days or so. So traders, very good luck in your trading journey. As I always have to mention, FRGNT4X.com. That will most certainly allow you access or gain you access into FRGNT Mastery, by where we depict the charts pretty much every morning. Pre-London Open, part of the packages, you will get access to 12 calls per month, but so far for the month of February, I think I've done 16, so you definitely will not get less than 12. Whenever I'm on the charts actively trading, I switch that zoom on and share my analysis with those of you that invest in me in FRGNT Mastery to be that base and guide for you all. So never fear, I'm not going anywhere. Unfortunately, TradingView has me absent for a while, but to those of you, as I've said, that invest in your education, invest in learning, invest in understanding how these markets work, I'm very much so there for you all. So let's just have a quick skim in terms of anything that we could have missed today. Even GU, for a nice example, there is always a great reason, in my opinion, why to choose other positions over others. As we can see, US dollar CAD is a fine example that we had more than one Confluence to take that position, albeit price is not going in the direction. Now, as I've just mentioned, I'm pretty sure that could well be just an imbalance fill before hoping to turn around short. But nevertheless, we have a high degree of confluence. We've refined a 4-hour order block down. We've used the 4-hour time frame. We've got multiple reasons to take that position. In contrast with GBP USD, there was no higher time frame 4-hour order block that I was comfortable with taking the position from. You see at the top here, we've got the 4-hour 50 MA. Therefore, I had every expectation that price would want to look to push up into that 4-hour 50 MA before rejecting it. So if I'm seeing a rejection slightly before that 4-hour 50 MA, I've got the opportunity to compare this position, let's say, to US dollar CAD and make that smart choice in terms of what position is going to be better suited for me. Of course, I can see a very similar setup here where we have that 15-minute order block. Price came in and gave a nice bearish engulfing candle, but wouldn't have given me an entry, and that's part and parcel of the deal of trading, finding the best trading opportunities that suit your setup, your entry criteria, and from that moment you simply execute. I wouldn't say emotionless. It is part of the game to utilize your emotions to your advantage so long as you are able to control them. More often than not, controlled emotion is just valuable information. If you're feeling fearful in a trade, perhaps you shouldn't be in it. Perhaps you're over leveraging a particular position. Perhaps you are not following your trading plan. There is always a reason why you are feeling a certain way. Trading is a very simple game. Strategy, execute. There is no reason to be feeling any other way other than just a dynamic mover with the markets. If you're feeling any other way, what are you doing that's incorrect? So it's a great question to have to ask yourself. Anyway, team, I will leave it there as always. That will be me rabbiting on. US dollar CAD, active trade of the day, only trade of the day. Currently break even in that position, looking for it to fill Asia lows with management coming in terms of taking price off down at that 4-hour 50 EMA. All the very best, team. Thank you very much for your attention. Thank you very much for all of your support across all the channels. I would say particularly TradingView, but until I'm back on, there will be no terms of advertising of my use of TradingView. Until then, all the very best, team. Take care. That's Charles.